Good afternoon, everybody. May I start by inviting Mr. Kale on to the stage, please? Let's give him a big hand. Let me start by asking our trustee Devashish Basu to welcome Mr. Kale with the bouquet of flowers.
Thank you.
To anyone who's connected with banking, Mr. Kale needs no introduction. He's been with the Customer Services Department of the Reserve Bank of India for as long as any of us can remember. And I think I've been writing for many, many decades, and if I'm saying this, you can imagine how much of an expert he is on customer-related issues. It's a great privilege for us to have him here. Mr. Kale has retired as the Chief General Manager in the Reserve Bank of India. If there's anybody who knows the ins and outs of what happens with banks, bank charges, how to resolve grievances, and has been at the forefront of every decision that has happened along the way, he's also the Member Secretary of the Damodaran Committee, in ensuring that we push for better and better regulation, then he has a key role to play because he was a pivotal person over there. So we are greatly privileged to have him associated and do this talk for us, and we hope that we're going to be persuading him to do a lot more. One of the things that we learned just talking to him a little before is that there are a lot of rules. We have a lot of grievances. All of you know that. We've been highlighting them in Moneylife. But plenty of times it's because we as customers don't know the different solutions, the shortcuts, the manner in which you can actually make your representation to the right body or the right entity and ensure that your grievance is redressed. Because you don't know that, you run around in circles and the problem gets worse, or you make a wrong decision, you decide to be defiant, you end up damaging your own credit score by taking a stand that I'm angry with you, so I'm not going to pay. At least on the last front, we keep trying to tell people, don't do anything that's self-destructive. Because by saying that you're not going to make a payment, you create long-term damage. And believe me, resolving a credit score that has been declared a defaulter is far worse than any other fight that you may have with your bank. So I'm not going to take up any more time. I think it's a great honor for us to be able to hear what he has to say on different issues and learn from it. So I leave the stage now to Mr. Kale.
Good afternoon, and a pleasure to be here. In fact, ma'am has been after me, requesting me to be here for quite some time. But till the time I retired, I was always busy traveling, trying to resolve the customer issues in different parts of the country or concerning different subjects. Okay. So, Madam Sucheta and Devashish are not strangers. Okay. I had at least more than half a dozen meetings. I've accompanied them to the governor's office, to the deputy governor's office. I've taken them over, explained to them the rationale or the philosophy behind a particular stand that the regulator may take, or the customer may have missed out some point which is very important, or he or she. See, in terms of the institutional infrastructure or the architecture, India is ranked very high in the world. India is ranked very, very high. For the simple reason that we have a Consumer Protection Act which is in place. We have a banking ombudsman scheme which is in place. There is also a similar ombudsman scheme for the insurance. There is also an ombudsman scheme for the income tax. Now the telephone and electricity authorities are also going to come up with an ombudsman scheme. Okay. And then we also have for the banking customers in particular, Banking Codes and Standards Board of India. So we have the Banking Codes and Standards, we have the Consumer Protection Act, we have the Ombudsman Scheme. There are just about 12 or 13 countries in the world which have this entire umbrella of consumer protection architecture provided by the law and fully met through the budgetary support either of the government or of the regulatory body. So this is a unique feature, and this was appreciated by the fact that the financial sector assessment program of the IMF and the World Bank in 2012 rated India among the top 10 countries as a role model for other countries to look at how to evolve consumer protection, regulation and legislation. So that is a matter of pride for all of us. But having said that, does it mean that we are all well off as consumers or we are all well off as customers? We don't have grievances? We do have grievances. Okay. All of us at different points in time, we do have grievances, and the reason for that is not very far to seek. The reason for that is, if you look at the word customer in the conventional sense, the way it has developed in banking, the word customer had the meaning of a person visiting that place of business as a matter of custom. So there was a tradition that the person had built of visiting that place for doing his financial business. That is the first part of the definition of the word customer. And the second part is, the person to whom he went for seeking the services was there to customize a solution for his needs. Okay. So there was a custom, there was a tradition of your visiting that place, and then there was the practice of the banker or the financial services provider customizing a solution to meet your requirements. Now, unfortunately, both these have been lost. Both these tenets of the word definition of customer, both of these have been lost, because from class banking, after nationalization, we moved to mass banking. From mass banking, we moved to automated banking. And from automated digitized banking, now we are moving to anonymous banking. So anonymity becoming the hallmark of the relationship. So how do you define the relationship? When anonymity, because today, earlier, if you look at the picture of a bank customer, 40 years back, 50 years back, or even when as a child also, somebody in place like Mumbai or Pune, wherever you went, somebody walking into a bank, you would always find him with a jacket, a tie, well-polished shoes. You never had the kind of footfalls that you are looking at the bank branches today, the way you see them operating with the millions of people using those services. So the profile, the way it had changed, coming from class to anonymity, it has also brought with it so many things that we need to understand. And one is, have we addressed the issue of what should be the appropriateness of the infrastructure to handle these many customers? Okay, so if you ask me, what are the problems with that infrastructure? There are two problems. One is, you have the mindset of the public sector bank, and the other one is you have the mindset of the private sector banks. Now, two distinguishing features of the people who deal with customers in these banks. The public sector banks know their banking very well, but they don't understand technology. The new private sector banks, they know their technology very well, but they don't understand banking. So there is an absence of domain knowledge on both the fronts. It is not just the absence of domain knowledge on the banking side. There is absence of domain knowledge on adoption of technology, and there is absence of banking knowledge in deploying technology on the private sector side. And this particularly has been the problem created by what we thought was a very wise move, by saying about 12 or 13 years of continuous non-recruitment of staff in the public sector as a cost-saving measure. So there was no corporate legacy, or there was no legacy created to know how things have changed or how things have evolved over a period of time. Between the period 2000 to 2012, there was no new recruit joining the public sector banks. So people who have been customers of that bank, they have seen only people reducing in number, and then saying the quality of service has gone down or the quality of customer care has gone down. Because see, the way the French people handle this problem, I can tell you, in France also they had the same problem. When they started automating the entire banking transaction in a straight-through processing model, the French did one wonderful thing. They said, okay, we are going to cut down the numbers, but what we will do is, in the banking industry, the total number of people that retire, we will recruit only 50% of that every year. So if there are 10,000 people retiring in 2000, only 5,000 were recruited. So by 2012, they have effectively brought down the number of people working in the banking industry by 50%. And contrast that with the Indian scenario. In Indian scenario, between 2000 and 2017, there has been an explosion. There has been an explosion of numbers. Today we roughly have 200 crore deposit accounts. All, taken together, multiple accounts, all taken together. Today, the actual number of customers is slightly less, but the number of deposit accounts is close to 200 crores. And we have around 40 crore borrowable accounts. That is loan accounts. So 240 crore accounts. So when you are looking at 240 crore accounts, what is the technology support and the manpower support that you require, even on a simple arithmetic average scale, to manage the relationships of these many customers? Okay. So you look at the numbers. When you look at the numbers, then you start getting an idea. Okay, where are these? Where are these customers? And mind you, 64 cities in India. 64 cities in India account for 60% of bank branches. Just 64 cities, I am not exaggerating the number. 64 cities with population of more than 10 lakhs. These are the 64 cities that account for 60% of India's bank branches. So the rest of the country, why it is underbanked or underprovided or underserved, is because of the reason that you are just having the rest of the country being served by just 40% of branches, and these 64 cities, and of that 64 cities, more than 40 are in West and South India. Okay, so I'm just trying to put the bigger picture in front of you so that we get. And then look at the products. Today, how many products are there? When I was a student of commerce or banking and all, there were just, on an average, what is the product? There may be 2 or 3 on the liability side and 2 or 3 on the asset side. Number of products. Today, how many products are there? How many products are there today?
Maybe 200 plus.
There may not be 200. If you take even the liability side, there are the deposits. Each bank, if you look at the category of their interest rates, each bank has roughly 85 to 90 kind of deposit products. Okay. Now, if somebody were to go and ask, of this, what is the most suited for me? Are you going to get the best deal out of it? Or are you going to get not so good a deal? Or what is going to be the guiding factor in your mind? If I tell you I have 89 schemes and you choose the best one, what is the one guiding factor you are going to be all guided by?
Bank's profit.
Huh?
Bank's profit.
I don't think. See, because if you look at that, most of the people are guided very, very blindly by the difference in the interest rates at the highest level of the interest curve. Nobody is so much bothered about the quality of the management or the quality of the governance of that particular bank. Otherwise, you can't explain why still so many people are crazy about going and putting their money in urban cooperative banks, where the number has come down from 2100 to 1400. 700 banks have been shut while I was in service. Okay. So we merely get carried away by what is the highest rate of interest at that particular point in time. And secondly, the consideration is, how far have I been with this bank? See, banking always has been a neighborhood concept. It has never been like you go walk 10 miles. That all came now when you started opening the branches in rural areas and urban, semi-urban areas. Otherwise, banking is always a neighborhood concept. You would always go to the bank that is nearest to you. So it doesn't matter whether it is UCO Bank or HDFC Bank. Only now we have tried to say, getting carried away by, array, this is promised, this is promised, this is promised and all. So having reached a stage where you have decided this is what you want, when you tell the banker this is what you want, does he necessarily sell you what you require? So that is the question. And when you tell what you want and he is not able to sell what you require, that is where the grievances start. Because that is the first point of misinformation or mis-selling, that's where it starts. See, many of the people who came in contact with me, who wrote to me, mis-selling, I said, you ask one fundamental question. Any banker who is telling you, invest in this, put your money in this, I said, first you must be able to clearly know whether it is a banking product or not. And that you can only know, the moment he says, put your money here, you are going to get 14%, you are going to get 15%. I said, one simple question you have to ask, whether a product is a banking product or a non-banking product is, will I get my principal back whenever I want it? If I put 10 lakhs, because banking by definition, all your fixed deposits and all, whatever you may say, 3 years, 5 years and all of them are repayable on demand. There is a position in law. Every single deposit, you can go and make a claim on the bank the moment you want it. That is the position in law as far as the banking. It is only because all the people don't come and ask for the money on the same day, and also because all the people don't repay the loan on the same day, that banking thrives. Otherwise, the principle of banking, if you want to test, you ask anyone who is trying to come and sell you an insurance product or a mutual fund. The basic question you have to ask is, if I have put 10 lakhs, will I get 10 lakhs and will I get it from you? I don't have to apply to anyone else. So that is the first test. And then the second question that comes is, am I being treated fairly? Now, what is being fair? See, we all get carried away by somebody talking to us very nicely. It doesn't mean he or she is treating me fairly. See, kindly, mind you, I have seen so many cases where the public sector may have sounded a bit rude, but I find they were more fair to the customers than many of the private sector banks or the foreign banks. People got carried away by the sales talk of the very wonderful young person and all this who will promise the moon, but nothing was delivered. Okay. So when you look at the problems and what the people are going through, coming specifically to the issues of the customers, last year, that is 17-18, under the two broad heads, grievances. For the industry as a whole, the number of complaints were around 2.3 million. And of that, around 1,30,000 came to the banking ombudsman's offices. Okay. Now, what is the banking ombudsman scheme? See, whenever you go to a bank, what you need to first know is, if I have a problem, what is my first access to the grievance machinery, grievance redressal machinery? And the second question you must ask is, if that base level grievance redressal machinery doesn't work, to whom do I escalate? So, the ombudsman scheme of the Reserve Bank of India was based on these two principles: accessibility of the grievance redressal system by the common person and his ability to know the escalation matrix. If these two were not working, that is the grievance redressal machinery, the initial level access and the escalation mechanism were not working. See, the ombudsman scheme is a very, very simple scheme. No advocates are permitted. You have to just make a simple application. It can be non-fulfillment of promise, it can be short charging of short payment of interest, it can be excess charging of interest, it can be charging of usurious interest rates when you are switching over from floating rate to fixed rate or fixed rate to floating rate. So those 29 grounds are given there in the ombudsman scheme. And when you can complain? You can complain to the ombudsman at any time within 12 months of your noticing the mistake. Not within 12 months of the time of the mistake occurring. It is within 12 months of your noticing that there has been a problem. Like when you do come to know, suppose there is a wrongful entry, you may come to know only when you update the passbook or when you get a statement of account. So if you have noticed it today, and suppose the transaction has happened in 2017 April, and today you have noticed it, so from today within 12 months you can complain. So it is not within 12 months from the date of the event happening. Okay, this is to be very, very clearly understood. And when you complain to the ombudsman, the very simple thing first they say is, have you first complained to the bank? And has the bank reverted to you within 30 days or not? If you have written to the bank, if the bank has not returned to you in 30 days, you are free to directly go to the ombudsman saying, I had written to the bank, this is the 30-day provision. And 30 days is adequate even in the current scenario where the branches are very far, because most of the data and most of the statements and all are available on the core banking solution or the central information system of the banks. And the other thing is the pecuniary jurisdiction. The ombudsman pecuniary jurisdiction is 20 lakhs of rupees. That is, if you have suffered a financial loss which is quantifiable on account of the mistake of the bank to the extent of 20 lakhs, then the ombudsman has the jurisdiction. But let me tell you here, Supreme Court in a very recent case decided that while the ombudsman scheme may say pecuniary jurisdiction is 20 lakhs, nothing prohibits the customer, any customer, irrespective of the financial amount involved, going to the ombudsman. The Supreme Court or the High Court may reserve the right to modify the award passed by the ombudsman if it is in excess of 20 lakhs. That is the latest clarification given by the Supreme Court. So even if it is amount 1 crore, 1.5 crores, you need not be worried. You can still go to the ombudsman, take up the issue. In most of the countries, like in UK, where it is the Financial Services Ombudsman Scheme, FSOS as they call it, there every retail and individual customer is allowed, irrespective of the pecuniary jurisdiction, irrespective of the amount involved. No corporates are allowed. Whereas in India, we have been more liberal. We try to pick the pecuniary jurisdiction so that even the small and micro enterprises which suffer sometimes do get a chance to have a proper access to the grievance redressal mechanism of the regulator. Okay. So that was the idea. So it is not that it is restricted only to the company. Yes, you have some point? Okay. Then there is also within the ombudsman scheme, while the 20 lakhs is the compensation, there is also a clause, additional clause which says you can get 1 lakh rupees additional compensation for mental harassment. How does mental harassment occur? How does mental harassment occur?
The bank makes you run around.
No, ma'am, that may be something which may be reimbursed as a cost. Okay, but you in the opening remarks you gave a very good example. It can be your wrong reporting to the CIBIL. Suppose it was somebody else's account and instead of that number being put, your number was put. Or your name and number being forwarded to the collection agency, although you have been repaying the loan installments regularly, your name should not have been figuring in that list. So that amounts to mental harassment. So there can be umpteen grounds where if the bank has done something wrong, which it should not have done to you, there can be a case for mental harassment. Okay. So when the scheme was announced in 1995, we looked at the Swedish model. And the Swedish model we thought was the most appropriate one for the Indian conditions, wherein ombudsman by definition is a wise person acceptable to both the parties, but not involved in the transaction. Basically a third party. So we adopted the Swedish model, and the initial scheme, the way it was launched in 1995, was each bank would contribute to the share of the administration expenses. Only the ombudsman was appointed by the RBI. He was not an RBI person, the ombudsman, not necessarily RBI. There were 1 or 2 from RBI. And only secretary, not even the secretariat, only the secretary went from the RBI. So the entire scheme was run by the banking industry, with only the secretary to the ombudsman being from the RBI. But in 2005, in 2006 to be precise, when the Supreme Court judgment on the ICICI Bank relating to recovery of loans, forced recovery of loans and harassment involved with recoveries came around, Then the government and the Reserve Bank of India, we sat together and said, this is not going to work the way it was anticipated to work when the scheme was envisaged. So in 2006, the entire scheme was revamped, and the entire scheme was decided to be taken over RBI, fully funded with its own staff, including the Ombudsman. So in 2006 was the first big departure in the scheme. So today we have 20 offices of the Ombudsman. Other than in the Northeast, every other state there is an office. Only in the Northeast we have only one at Guwahati. Otherwise, in every other state we have an office today. We have an office in Jammu, we have an office in Ranchi, there is one in Raipur. Everywhere there is an office. And then in 2009, we again modified the scheme to look at what was possibly the biggest effort in deregulation. See, in India, there has been a bit of a problem in the way we have gone about deregulating our banking business. In 1998, the advances related, loans related interest rates were fully deregulated. 1998. 2006, we deregulated the deposit rates fully. 2009, it was total deregulation because we said saving bank rate also to be decided by the banks. But only one change we made, and that was the change we made about daily balance being taken for purpose of calculating the products. So I made a detailed presentation to our Board for Financial Supervision, and they 5 to 10 bankers tried to oppose it, including State Bank of India, and all. We said nothing doing, because that has meant a difference of about 0.5% to the saving bank interest being earned by the people. Otherwise, if you all remember, it was always the lowest balance between 10th and 30th of the month that was being used by the banks. And today, with computing power available, with core banking solution available, there was no problem for the banks to adopt that particular strategy. So between 1998 and 2009, when the deregulation happened, unfortunately, we didn't have a mechanism of looking at how do you address the issues created by gaps in regulation. See, earlier, for everything you had the guidance from the RBI, you had the procedural guidelines, or you had the prudential guidelines, or you had the regulatory guidelines, for everything. But after 1998, when the things started changing, there was a regulatory gap. And that gap created problems. What are the kind of problems? See, today, you are all talking of service charges. When you talk of service charges, see, kindly remember, this was the first question that was asked by the parliamentary committee when we went there and made a presentation. The first committee is, are the banks not there for rendering service? Why should they charge service charges? This was the first question that was asked. So the mere and simple logic to that is, we said today it is no more branch banking. Today the man carries the bank in his pocket wherever he goes, and he has access to the banking services anywhere, anytime. So the charges that are being looked at are in terms of the convenience and the effectiveness which the person is getting. So the members of parliament were convinced. But they asked, what is the underlying caveat? What is the caveat that you have? I said, caveats are in terms of 2 or 3 things. One is, each customer must know what is the value that he is providing to the banker in terms of his relationship. See, today when you say, I have got 10 crore accounts with me as a banker, what is the value addition each account is making in terms of value to the business? And second, what is the time that the banker is spending on each customer? Is it that I have provided 10% business and I am visiting the bank not even once? Or is it that I am providing 5% business and I am visiting the bank 20 times every day? So the relationship time and the value added in terms of the relationship, those 2 things were the consideration. And then we said, the man in the street or the common person should be told very specifically by the banks that the charges that are being levied to him are on the basis of average cost incurred per transaction in that particular category. So the idea was, never there should be a situation where I am subsidizing somebody who is much better off than me. And this was based on the experience we had, a very bad experience we had in the Reserve Bank of looking at the BPLR or the PLR related loans. See, all of you know the PLR, prime lending rate, which was first announced after deregulation in 1998. PLR was the first kind of interest rate regime that was announced by the banks. Now, in PLR, typically, one thing happened. When you said prime lending rate, it means the best borrower get at the prime rate. Is it not? The best borrower. But then how come did it happen that 20% of the bank's portfolio was going at below the prime lending rate? So who was funding that difference between the prime lending rate and the money that was lent at below the prime lending rate? It was you and me, the common persons. It was a retail customer who was funding that difference. So that is the first big admission we had to make of things not working in deregulated environment, because we had not tried to look at how the people could be foxing the system in trying to look at how do I pass on the benefit to somebody else less deserving and not where it is actually due. So this was the first wake-up call for the Reserve Bank when we said PLR lending below the PLR, 20% of the portfolio going at 1.5% below PLR, 2% below PLR, and the retail portfolio the rates never coming down below 12% or 12.5%. So that was replaced by another committee, T.T. Ram Mohan, who was the professor of finance in IIM Bangalore. Then we got the base rate. Even that didn't work, because when you looked at the base rate, trying to get various components. This is the overhead. These are the tenor risk premium. These are the normal administration overlays. These are the normal provision requirements. So then I was there in the next committee also, which decided on the MCLR, marginal cost of lending rate. Again, that has its own flaws, marginal cost of lending, because see there, marginal cost of lending, if you look at it, marginal cost is basically how much new deposit you get every year, which alters the marginal cost of your funds or marginal cost of deposits. When this issue was discussed, marginal cost related issue also was discussed in detail. Mind you, if you look at the entire banking industry, the overall length of the portfolio of deposits is not more than 2 years. Somebody may be saying, I have put my deposit for 3 years, 5 years and all. But you look at the entire industry, Indian banking industry, the average maturity profile of the deposits is 2 years. And 2 years for the term deposit. If you take away 40% of that as CASA, current account and savings segment, so it may come down further. So the marginal cost theory, whom did it benefit? It only benefited the new private sector banks. Because you look at the profile and the portfolio of deposits mix, it is only in the public sector banks that people put their money for more than 3 years. This data is available in the public domain. You can go and check anytime. I am ready for verification. And all the private sector banks, foreign banks and all, nobody puts their money for more than 15 months. So they wanted to capture on the fact that, okay, my marginal cost of lending is coming down, marginal cost of deposit coming down, so I am able to lend at a lower rate. Similarly, there was a case with this other case which we discussed, and again finally when things came to light was the credit cards related interest rate charges. When you are saying 2.25% for a 45-day cycle. So if you are saying 2.25 to 2.75% for a 45-day cycle, effectively your annualized rate is somewhere between 30 to 32%. Okay. But now today, if you look at it statistically, the credit card usage has gone down and dropped. And even the credit card related complaints also have dropped.
Debit cards are Debit cards are
I don't know. What is the answer? The answer is something different. The answer is, see, banks have a very smart way of foxing you. Banks have a very smart way of foxing you. All of them replaced it with personal unsecured loans at 19 or 20%. So today your entire credit card portfolio has been replaced by what is called as a personal loan, anywhere between 18.5 to 20% given by so many banks. Why so many people still fall a prey to SMS and all? Your pre-approved loan is sanctioned, ready for disbursement. So this particular portfolio was replaced by that. Again an eye-opener. So to look at these gaps, in 2006, the Reserve Bank of India set up a regulations review authority under Dr. Reddy. And then we came to the conclusion that we need to have a body which will clearly say what will be the standards and codes of customer service each bank will adhere to. And that's why in 2006, the Banking Codes and Standards Board of India came into being. Now, almost all the major banks in the country, all the scheduled commercial banks for sure, all the foreign banks operating in India with a retail portfolio, and 3 or 4 big scheduled urban cooperative banks. All of them signed to this charter and they said, we will become members of this body. And what that means is you undertake to follow certain standards and procedures while dealing with the customers, and those standards and procedures are, once you accept them, they are the minimum standards. It is not as if you adhere to all of them, you have done something great. They are the minimum standards of customer service and customer communications and customer delivery which you have got to adhere to. Okay. Now once those standards were established, again typically see what happens is you have the standards, you create all the infrastructure, but how do the people know? How do the people know of it? That there is a standard, there is a standard setting body, there is a code, there is a code setting body. So then the problem again that the RBI and all the powers that be noticed was lack of awareness. Lack of awareness is the biggest problem that we face. And is it only in India? No. We are an august company. Even in the US and UK, the people are sometimes more ignorant than we are. Okay, nothing to be surprised or worried about. Because this was clearly visible in the 2008 financial crisis when the Senate Banking Committee in the US, when they were listening to the people's grievances and all, they said the banker has given this statement saying this is a variable rate mortgage or this is an adjustable rate mortgage. Both of you have signed off on the most important terms and conditions, a one-pager. How do you say no? He said, I have signed, but I have not read a word of it. Or I have not understood a word of it. So in India, the problem is also greater because we just don't have the illiteracy of the financial kind. Today we have created 3-4 kinds of illiteracies. One is the general level of illiteracy we have. Second is the digital level of illiteracy. And third is the financial level of illiteracy. So we need to bridge all these three to reach. Because today everyone wants the fruits of technology. Everyone wants the convenience. But the moment something happens in terms of a mishap or in terms of a fraud or in terms of somebody being duped or somebody losing the money, we suddenly wake up. Okay. So this was an issue that was discussed at tremendous length in so many committees. In the Damodaran committee, we discussed this for about 2 or 3 meetings successively. Every week we used to discuss on this. See, the problem there is the licensing powers which the Reserve Bank has. Now, Reserve Bank, once it issues a license to the banks, it never says how you should do your business. It says you are permitted to carry on the business of banking, provided you are in a position to repay the depositors as and when their claims arise today, now, or at any time in the future. Now, Reserve Bank is never expected to be an astrologer or a palmist or a numerologist or anything. Because, see, this 1949 Banking Regulation Act, these are the powers conferred on RBI under Section 23. In 1949, I think nobody believed that internet banking or use of technology or use of computers is going to be so widespread in delivery of banking services that it is going to pose a problem. So today the question that we need to ask is how somebody is going to say whose banking in terms of the net banking abilities or the technical abilities is safe or the safest. Very difficult, because hacking into a system or getting into a system by cracking into its codes and this one, or a fraud, both these things you know only after they have happened. You never have a first-hand knowledge that this is going to happen. Like there's always a threat, no? Like somebody is trying to pierce into my network. So there is what is called as the vulnerability assessment and penetration testing for computer systems. Now we had mandated this to the banks that can you do a VAPT, vulnerable assessment and penetration testing, and we in the Reserve Bank did it, and we were surprised to know that in a year there were about 800 attempts to attack our network. So there is always, because today you are holding all your money and the money related data in a digitized form. So nobody need raid 800 or 10,000 branches. What you just need to do is get cracking into your database and get the data out of it and siphon it off, and you are done. Okay. Just about 6 months back, where the malware attack in the European Union, some of the East European countries, erstwhile communist countries, holding everyone to ransom. If you want your password to be unlocked, you remit 300 pounds or 300 euros to this particular account. So the way banking is being delivered, that process has undergone a change, and we need to develop strong and robust mechanisms to find out as to which bank or which setup is the one that is going to deliver safe and reliable services in any mode. So you go to foreign banks, their website and all, if you look at it, the difference I am telling you between the Indian bank, foreign banks. You go to any of the leading foreign banks which are good in terms of delivery through the automated channel or the digitized channel. Their network access policy, the first sentence itself makes the difference. In India, if you go and look at it, all the Indian banks, their policy starts with, we are not responsible. 1, 2, 3, 4. Okay. You go to, for example, you go to Wells Fargo Bank. You go to Wells Fargo Bank, in fact, day before yesterday night, the way he was grilled by the Senate Banking Committee in the US, you must, it is just a 38-minute grilling, and you must listen to it. This man very, very humbly saying, sorry, I have tried to hurt my customers. I'll set it right. No arguments in the newspaper, no this one, mudslinging or anything. So Wells Fargo Bank, if you go at look at it, his take or his policy on the same thing, the first sentence it reads, our bank is responsible for 1, 2, 3, 4. So look at the departure. We are not responsible for, we are responsible for. What is written there under may be the same, but what appeals to you as a customer? See, in fact, if there is an attack on the network, then if it has been wrongly done, then it's all the more the bank's responsibility to compensate you. Because how come somebody unauthorized was able to enter your network? It means your network is not safe. So these issues that came to the light also brought to fore the next big challenge in terms of delivery of customer services, and that was, how do you look at the liability in terms of mishaps or misdemeanors or misdeeds that may happen? So whether there is a limited liability clause, whether there is a compensation clause, whether there is a zero liability clause, or whether there is insurance. So these are the 4 things that are always available. They should be available to a customer. I restrict the liability, like now all the banks have started saying, if your credit card is lost and you have hotlisted it within 24 hours, all the transactions thereafter are our responsibility. Now, this was again as a fallout of the recommendations of the Damodaran committee. or zero liability. See, in countries like US and all, the moment you put it for hot listing, zero liability. See, kindly let's understand the difference. In US and all, we shouldn't be comparing for the simple reason. In US, any amount of compensation is possible for them because the entire society is driven by credit cards. So the amount of turnover commission they make, they're able to afford to pay any amount of compensation. Here in India, it's a fact that all the banks are making losses on their credit card portfolio. Not a single bank is making profit. It's a fact. Every single bank is making a loss on the credit card portfolio. Forget compensating, they'll try to avoid their liability. That is one of the major reasons. So they try to invent the other product, which I told you, personal loan. Okay, then insurance. See, the insurance companies also have to learn how to provide insurance for different kinds of scenarios. Today, you go to US, for every single mishap that may occur in your life, there is an insurance available. And once the incident occurs, once the trigger happens, no questions asked. No questions asked. You just file your paper, you get your money within 72 hours. Here, you still have a situation where if your car has been hit by somebody, you are always worried. You try to take the photo from your cell and all. Nothing doing, man. See, I was in Australia, let me tell you, I just saw some accident. He said not to worry and all. So I said, how do you? No, I'll just file my claim. The insurance company managed to get the CCTV footage, looked at it, who was wrong, paid the money, claim settled. So we have to migrate towards this scenario where compensation, zero liability, limited liability or insurance. They have to come together to look at how to look at the customer issues involved. Okay. Now, if you look at the customer services itself, what are the kind of services that we use normally? When I go to a bank, I have a portfolio of services, but what are the most frequently used services? I have deposit. No, deposits, we'll say deposit as one category, liability side. I have the loan side. I have the card products. I have the remittance products. I have the parabanking products. Okay. Now, I'll just put this idea to you. Some bank says, you put 1 lakh in your account, saving bank account, and get everything free. And we will pay you 3.5%. Okay, or we'll pay you 4.5%. How many of you have tried to evaluate whatever they have promised free? How many of them services and how many times you actually use them?
Normally the services are provided under such things that very rarely you come.
No, even if they are, no, I'm not saying, I'm saying, suppose it says RTGS. Okay, RTGS free. I'm just giving an example. How many times you use RTGS? Huh? No, and okay, very rarely. And even if you use it, how much you have to pay? 5 to 25, depending on what is the volume, from 2 lakhs to 20 lakhs and above. Okay. Now, even if you have used it only once, you would have paid 25 rupees. Okay. Now, for that, what you have agreed to? You have agreed to put 1 lakh at 3.5%. So, whatever is promised free, kindly look at its relevance for your purpose. Don't just, and secondly, there is a lot of clarity which one must get. Now, the banks are slowly clearing the air on that after persistent follow-up and with me also talking to the DBR and all. 1 lakh is just saving bank account or my all holdings together in the bank? No, that's what. So I'm saying again, get clarity. Get clarity. Because somebody is saying, State Bank of India now has clarified. It is 5 lakhs in your relationship with the bank. It is not 5 lakhs in saving bank account. 5 lakh in your relationship with the bank. So similarly, if somebody is saying, no, Kotak and Yes Bank, they said 6% saving bank account, 1 lakh. Now, how many of you have tried to get a clarification whether it is 1 lakh only in saving or 1 lakh in the relationship?
1 lakh is the saving in Kotak.
Again, ma'am, that needs to be clarified. They are not.
We did at that time and they announced it.
And my understanding with them, my talk with them has given me an impression. Recently, I was with them, Yes Bank, has given me an impression that it is 1 lakh in the relationship.
It is 1 lakh in the saving, and Axis Bank is 1 lakh savings and about 7 lakhs for the relationship, if you want things free.
Okay. So anyway, the short point that we are discussing is whatever you are promised free, how many times you use those facilities. So instead of that, I was just discussing with ma'am before walking in here. The Reserve Bank has also given the facility of a basic saving deposit bank account. Basic saving bank, BSBD we call it. Zero balance, ATM cum debit card, and one book of 20 check leaves every year. Okay, get it. No, try it. It says, because see, I'll tell you, the point is, if many of us try to do this, it becomes a moment, then the bank may have a problem of trying to rejig its strategy of trying to price the different products. See, most of the developed countries, the balances in the saving bank account are absolutely minimal. Absolutely. Today, when I say 40% of my deposits are in CASA, who is benefiting? Banks and the people who are playing in the stock market. Yeah, really. I'm not joking. See, there's also a part of financial education. See, let me tell you, in India today, we totally have a foreign investment of $260 billion equivalent. That is about, the total foreign investment in different portfolios, equity, debt, banks all taken together, 260 billion. That comes to around 16 lakh crores. Okay. Now, just think of it. If all of us had been a bit less conservative, I am not saying a bit more risky, I am saying a bit less conservative, and even 5% of the money had gone to the stock market, from the 1,20,000 crore that is there in the banks as deposit, even if 6 lakh crores had gone, many of us would have been millionaires beyond our imagination. I am not saying pick up this particular stock or pick up this particular, no. I am just saying, kindly remember, in India, we are the biggest enemies of ourselves as financial consumers. Because most of us tend to forget the rule of 72. And what is that rule of 72? Now, rule of 72, it works both ways. No, if you divide 72 by the rate of inflation, the number that comes, if you don't earn more than what the inflation rates are, if you divide 72 by the rate of inflation, in that many years your wealth will be halved. So if today we are talking of 4.5% inflation, or say 5.5% on average, if I divide 72, roughly in 13 years my wealth will be halved, if I don't keep on earning more than 5.5. And the other one is, in how many years I want my investment to double. So if I even take a conservative estimate of 15%, and that is what the last 6 years simple average returns of the stock market have been. So if I had taken 15, in 5 years my wealth would have doubled. And irrespective of the stock. Because look at it, how many people who have, and in the process what we have done, in the process, the bigger problem is by putting all our money in the banks now. We have ensured that the rates for ourselves have not gone down on the loan side, but because of excess supply of these funds, the rates on the deposit sides have kept on falling. So we have been our own enemies. So if you are trying to, and mind you, we can be the biggest stock market driven economy in the world. Because there are only 3 big markets in the world. The entire European Union, if you look at it, no Germans or no Swiss person invests in the stock market. They all go by the bank. For them, it doesn't make a difference because both of them are at 0% inflation. Both of them are at 0% inflation. So you start from New York, you have Chicago, New York, then London, then the next biggest, India, and then Tokyo. There's only 4 big segments, and in Asia, Bombay Stock Exchange is the oldest, not even Tokyo. 1875. Bombay Stock Exchange started trading in 1875. So let's be aware and look at the numbers also. For 200 crore deposit accounts, we just have less than 2 crore active demat accounts. And in terms of density, where are the most active? Huh? Which state? Can you tell me which state is the most active? Kerala. In terms of density of DP accounts and activity, Kerala tops the list. Shocking, surprise. We all feel we are in the financial capital, but how far away we are from the real nitty-gritties of managing our finances very well.
It's a latest fallacy that Kerala is a leftist ruled state.
See, all of us, see, point is, boss, I'll tell you, all of us are leftists by heart, because heart is on the left. Okay? All of us. And money always is where your heart is. So if your heart is on the left, it doesn't matter. With respect to what is the party in power. See, they are all the people who decided to take that plunge into enterprise and go and make that money. So it was worth the risk which they took. See, I have seen in the Reserve Bank some of the most, I am telling you as an example, some of the most capable people who are working with me, just because somehow they were not keen on leaving Mumbai, finally ended up as retiring as assistant manager. See, I told some of them, you are as brilliant as me. Many of you can easily become deputy general managers.
Mobility.
Not that mobility, see, we have to get that. Today, see, the younger generation today, they are not at all worried about where they are, because whether they are in Bangalore, some of them are very comfortable being in Bangalore, in Hyderabad, in Indore, or most of those places. So coming back to the subject at hand, financial literacy, financial awareness. So the 5 types of products that we used in terms of the deposit product. See, whatever the regulations the RBI says, the banks always have a two-way argument on that. Reserve Bank will never say this is a must, this is to be done. It will never say that. It will always say banks may. Now, how the word the banks may will be typically used by the banks? How many of you know the instruction on the senior citizens deposits? So we have said banks may, in their discretion, give 0.5% more. Okay. So how many banks use that discretion? Some of them don't give anything. Some of them give 0.25. Some of them give 0.5. Okay. Come to the premature withdrawal of fixed deposits. There also Reserve Bank says banks may charge a penal rate equivalent to 1% of the tenure for which the deposit has run. How many banks forego that premature penalty? So this is the difference. This is the difference in the way the wording is interpreted by the banks. You say, the Reserve Bank has said the same thing, may, in both the situations. But in one, you said, bank has said Reserve Bank may, why should I pay? And I said, no, Reserve Bank has said you deduct penalty. Okay. So, when you look at the deposit accounts, how many of us, when I said 40%, or even the demonetization related, because I was subsequently on the visit of so many banks and all, assuming, let's not look at the political motive, and assuming all the money that had come to the banking channel was genuine, true to you. What was the national wastage of resource? Even had that money been lying in your SB account, how much you would have earned? 2001, the 1,000 rupee note was introduced. Okay, 2001. 2016, it was demonetized. And between the time it was introduced and the time it was demonetized, the value of that 1,000 rupee note on the day of demonetization had fallen to 443 rupees. What we call as the IDT, inflation denomination trajectory. Each denomination currency, we mark it to the purchasing power and then work out what is the inflation denomination trajectory. So a 1,000 rupee note had come down to 443 rupees. Assuming you had put it in saving bank account, there was a chance that at least it would have remained 1,000 rupees. Was there not a chance that it would have been? So the point is, we are not very careful and we are not very conscious managing our finances. And these days, we look at the avenues. See, I can understand about 20 years back when there were no ATMs, when there were no net banking facilities available, when there were no card products, when there was no third-party funds transferable, or you had to rely on the check. I can understand the precautionary motive.
Sweep account.
Again, you have come to a sweep account. Now, when you go in for a sweep account, how many of you check how much interest rate you have effectively made? What is the basis they are adopting for encashing the FDRs when your cash balance goes, and suppose I am having a sweep-in facility, I go and do a RTGS, 3 lakhs, okay, and my balance in the account is 50,000, so 2,50,000. Has the bank told you which FD they will be encashing first? I don't know. I don't know. Kindly go and check. And after they have done that, also check what is the effective interest rate you have made on the SB account. Because each bank, there is nothing, Reserve Bank has not said anything on this. There is a bank which followed the last in, first out. So, they said, okay, whatever latest money has come, because the older ones are carrying higher rate of interest, so we will not encash those for you. So the later deposits we will keep on putting in the sweep-in FD facility. Now, it so happened that when they put that money, the short-term FD rates for 46 days to 90 days and all, they were 4.25%. Okay, so when the question of sweep out came, they encashed the latest one, and then they said 1% penalty for premature withdrawal. 3.25, and then the saving bank interest was 3.5. So now have you made 3.5? So kindly look at, don't blindly believe in sweep in or sweep out. Look at how it affects you. Okay. Then, in terms of the deposits, most of the people have had a lot of anxiety about cash and all. That's not a very major issue. 3-4 times is good enough for depositing. But if some bank for the common customer were to say, will not accept or anything, you can easily challenge it to Supreme Court, straight away asking for cancellation of that bank's license. Because the initial license given to the bank clearly says, set up for the purpose of accepting deposits in cash and checks. Okay, so there's nothing to be worried on that front. Okay, this is about the deposits. The other major problem which you face in terms of the deposits is the area of deceased depositors. Okay, how many of the banks paid to the nominee? How many of them paid to the nominee?
They're supposed to, right?
Huh?
I mean,
A lot of fuss.
they make you fill up some forms, and that's a source of...
Ma'am, I'll tell you, there are two things. One is, the Reserve Bank of India has clearly said, if the amount is less than 1 lakh rupees, straight away, no indemnity, nothing, take the signature, fill the form and all. Now, recently the Supreme Court judgment, if you look at it, again they have reiterated the same thing. Even if the money is paid to the nominee as the holder in due course, the bank is discharged of its liability, because the nominee who is receiving the money is holding it in trust on behalf of all the heirs and legal heirs and other claimants. So the banker need not be worried. But artificially these people try to create a scene as if they are the people upholding the principle of equity and all. It need not be there, because there again the moot point is, if you have refused to pay on that count, then at what interest rate you are going to pay the claimants?
They will say savings. They will say savings.
It has been set aside by the Ombudsman. We have said for the period you have not paid, you will be paying at the FD rate.
Contractual.
FD rate.
Whatever was different.
Because what happens if both the parties in the FD, they have ceased? See, the contractual rate will come provided one of the parties is alive, and the party in that case has the option to go and ask for premature withdrawal, in which case no premature charges will be deducted. See, that again is a very clear position. If there is a either or receipt, and if one of the persons has, one of the parties or one of the depositors has ceased to exist, the other person goes and make the claim, there is no deduction on account of premature withdrawal. Here what I am telling you is, in case of the money lying with the bank and not being credited to the nominee's account, then it has to be paid at the rate of the FD for which period the money has not been paid. Because sometimes it may take more than 12 months, 15 months, 18 months.
The intervening period, the FD rate applicable to the intervening.
Yes, from the date the claim has been lodged to that period. Then there are the issues with this joint operations. Earlier when you opened your saving bank account, when you said either or, when you said either or, did you at any point in time check whether your wife was signing a check, going and withdrawing the money? Because most of the checkbooks were in the house safe. So now when the question of joint account in the savings spouses comes, what happens when the ATM cards are issued to both?
Add-on cards. Add-on cards.
Not add-on. Why? Not add-on. See, I am a joint account holder. See, the add-on will come as a facility, like a credit card. I am not the major primary card holder. The add-on will come there. See, I am a joint account holder. Huh? Suppose a bank says no. Again, that is wrong. See, because what you have done, you have basically automated the process. Legally, what has changed? Nothing. Legally, nothing has changed. Legally, what? Same, both the persons are account holders. Is it not? So, there was this wife who came to me and said, no, this has been done and all. I said, ma'am, kindly lodge a police complaint that this such and such ATM cum debit card has been lost. Then nothing happened. She didn't come back to me. Then I checked up with the bank, what happened? I said, sir, we showed her the TV footage. CCTV footage. It was her husband who was withdrawing the money. So that's why we said, no single card if the account is in joint name. Kindly issue 2 cards. Because both have equal rights. There is nothing like a subordinate or a superior right. Both account holders have equal rights. Okay. Then come to the asset side, loans. What is it that bothers you the most in case of loans? In case of home loans or in case of any other loan that you look at. Point is, the issue again, which is we need proper follow-up, further constant follow-up. Even I'll request Sujata ma'am also. When you say EMI, what is EMI? Equated monthly installment. Now, how many of you really know how the installment is equated? Is it equated only in terms of the period, or it is equated in terms of repayment of principal and repayment of interest? That is wrong. Who is benefiting?
Always the
bank. So when you say EMI, it is to be equated both in terms of the principal and the interest. Because when I am repaying the principal, my charge on the interest rate is automatically coming down. So when my principal comes down in a EMI situation, my 15-year loan may be actually repaid in 13 years. So this is where the banks are taking the customers for a ride. And the other side, if you want to repay a loan in 7 years, Why should he sanction it for 10 years? You have never wanted it for 10 years. You wanted it only for 7 years. You are able to repay it in 7 years. Because again, elongation of the maturity tenure is also in his interest. It is not in your interest. Okay. Then reporting to CIBIL. Okay. Now, when you look at the CIBIL, see the basic idea of this credit information companies or the credit rating agencies, all this was, this should be used as price discovery mechanisms to arrive at a proper profile of that person so that he or she gets access to market funds at a reasonably comparable rate. Okay? Now, if I go to X bank, he says, no, we cannot give a loan. I can understand if he is full on the book or if he is full on that segment of the portfolio. But I go to X bank and he says, I'll give you at 9.5%. And I go to Y bank, he says, I'll give you at 10.25%. I go to Z bank, he says, I'll give you at 8.75%. No, where is the scientific pricing? Because if Kale is risk X, he is risk X to all the banks. He is not X plus to A bank or X minus to B bank or X double plus to Z bank. So the market should be looking at what is the price discovery mechanism based on the information I have about this person. So instead of trying to use it as a recovery mechanism or trying to cheat people, I have to look at it, how it is being used. Because today, you go to CIBIL, the moment you try to look at it in terms of 3, 4, 5 times, you are suddenly marked as somebody trying to scout for credit, which damages your score. Now, why should I be looking at that for damaging my score? I am only trying to look at, that is because the markets have not evolved, nor the Reserve Bank has made a serious effort to evolve the market in that direction in terms of looking at the credit information company related score and how do I use it to price the credit. So you go to US, you take a mortgage loan, you go to any bank, the difference will be somewhere 0.1 to 0.2 in the final rate that you pay. It will nothing be more than that. Okay. Then the question of reporting to CIBIL. See, one of the common complaints reporting CIBIL is it is not accurate. No, both the banks and the CIBIL both have to be blamed on certain counts there. Because I have seen a situation where the data for June 2017 was sent, it was uploaded, and then the data for May 2017 was sent in August. Then that was also uploaded. So in the process, what happened? Whatever was sent for June, after May data was uploaded, the June thing was undone, and they showed all the accounts as overdue, whatever was repaid in June, and all the people were issued notices. Then there was a problem. Then this lady Harshita Chandorkar, she was in, sir, what to do? I said, first look at what cycles you are running in terms of data and which particular bank has goofed up. Because you cannot do it for a single bank. When all the banks submit the data, the entire thing is uploaded because it is bank neutral, that particular information with CIBIL. So that is a mistake. Then the migration charges. When you move from fixed rates to floating rates, floating rate loan, the entire concept of penalty on floating rate loans being waived, two persons, one Dr. Chakravarti and me, who fought it tooth and nail and finally had it put in the regulations that there will be no penalty for prepayment. Prepayment penalty will be there only when it is a fixed rate loan. For floating rate loan, there is no prepayment penalty. Because it is a floating rate. Whatever is the going rate, your funds will be at that rate. Your loan will be at that rate. Because you cannot have the best of both. You have the freedom of MCLR. You also have the freedom of floating rate. If the fixed rate is there, I can understand. You have a problem on your ALM. Okay. But if it is a floating rate loan, where is the problem? Every customer that comes, because, see, look at it. In case of floating rate housing loans, if today the customer is coming and you say, I'll give you a loan at 8.25 as a special case. And then you have contracted 5 years back on a floating rate. And it says your loan will continue at 9.25. Will you agree? You should not. Because, as I said, the MCLR concept is based on your quarterly working of deposit rates, your marginal costs, and your load factors. So, if today you are giving a floating rate loan at 8.25, all my earlier portfolio also should be marked at 8.25 and I should get the same rate. I cannot be having a different rate because the floating rate itself is worked on the basket of fungible resources I have. It is worked out on that. Okay. Then conversion rates from fixed to floating or floating to fixed. It is a choice. Now, if your EMI is say monthly 15,000 rupees, okay, and it says conversion from floating to fixed. If you feel now today the rates have bottomed out, you may like to switch to fixed rate loans from floating rate loans. How much you should be willing to pay? No, you are going to work out. You are going to do a mathematics for the residual amount of tenure of the loan and how much will be the load factor and how much you are going to charge now. Now, if he is going to use that floating rate as the residual period fixed rate and ask you to pay the penalty, you straight away drag him to the ombudsman. Because that is non-fulfillment of promise. Because in every loan that you have sanctioned, there is a promise that if there is any occasion where you feel there is a switchover required for the customer from fixed to floating or floating to fixed, that option will be given to you once. At least once during the currency of the loan. So you need to get that. Okay. Then come to the card products.
When was this implemented?
Which one?
No penalty to pay for.
This guidelines 2011 for floating rate loans, no penalty. 2011. 100%. You can look at it in the interest rates on advances circular issued by RBI.
Because in 2010 I had closed a loan. Say bank had
Can we do the questions later? Even we have a lot of questions for him. So we're going to wait for him and then do it.
Okay. 2010 it may not be covered, but 2011 it was pakka. 2011 onwards these instructions have been there. Okay. Now look at the card products. Card products, many of us fall for it the moment we say lifetime free. I don't know what is so great about it. There's nothing to be worried. Lifetime free. Now, my life, the life of the bank may be much, much greater than the life of technology and the life of plastic on which the card is printed. So, in that sense, the lifetime free doesn't have any meaning. So, you should never expect that thing to be free because it is never free. It comes with so many riders. It is never free. But if they have said, then the Reserve Bank instructions are very clear. Then irrespective of who is the follow through, if that bank gets merged with somebody else or the facilities attached to it get merged with somebody else, everything will continue. I remember there was this case of Deutsche Bank in India that said for their diamond card holders, there is this facility, if you use more than 10 lakh rupees worth on the credit card, they will give you a free business class flight to Frankfurt and back by that particular airline. But unfortunately it so happened that that airline wound up. And then Deutsche Bank took a plea that we had promised it on that airline. But we in the Ombudsman office took a stand that no, you had promised this. So you should have included it in the clause saying whatever airline takes it over will also be requested to honor our commitment and the facilities to be extended will continue. Okay. So in terms of the card products, when you look at the cards, one of the basic problems in India we have vis-a-vis the cards is the imbalance we have created between the acquisition and the issuance. See, when you get a card, how many of you actually try to find out how many places you can use it? How many of you find out?
Before withdrawing money,
We just assume it's a master or a visa, so obviously it will be
So the point is, this is where we have created the imbalance in terms of the infrastructure, as I said. That is, for every 10,000 or 1 lakh cards that I have issued, how many merchants I have where I can use this card? And this is where the problem of demonetization actually came. We went on a spree issuing the cards without creating the infrastructure at where places where these cards could be used. Because the moment, again the psych, the moment you said card, he said no, 2% you have to pay the cash. No, point is, if some merchant is saying 2% cash and if he is the acquired merchant of that bank, you can always drag that bank to the ombudsman office. Because if he is the acquired merchant, he cannot charge you more of that bank.
what is acquired?
Acquired merchant is when you go to different places. You go to the Sakari Bhandar or Reliance Fresh or anything. When you put the card in the POS machine, the point of sale machine, you see at the header, the name of the bank comes first. So you may be having a HDFC bank card. Okay, you go to Reliance Fresh, use it, and at the top of the billing statement, when you use the card, you will get the name ICICI Bank. It means you are a person holding the HDFC Bank issued card, and the web store where you have used it has been acquired by ICICI Bank. Okay, so the acquisition and the issuance functions both need to go hand in hand. So I cannot have see, this is the problem that was created in the northeast of the country. If you look at the northeast today, the entire banking infrastructure, more than 50% of it is by SBI. 2,500 branches, 2,500 ATMs. And all the banks here, ING, Vaishya, Axis, all of them entered issued cards there. Open our account, have it here. Now, where that person is going to use that card? Where that person is going to use it? So, you have to keep on finding out. So, other than airline booking or train booking, you are hardly able to use it anywhere there. So, the acquisition function of the outlets where you can use the card and the target group to which you have issued the cards, both must be matching. Then only the cashless or the seamless cashless transactions will start happening. Okay, this was not made compulsory till the time the demonetization occurred. Because the problem is, the real problem there is the settlement cycle. If you look at even the debit cards today, why the government had to intervene and say up to 2,000 rupees, we will bear all the transaction charges, you don't charge anything to the customers. Because even the debit card, the cycle takes about 72 to 96 hours to complete from payment gateways. Because they wait for the 24-hour cycle for the entire globe to be over. Because I don't know where all I am using my debit card. I may be using it in India, I may be using it from Tokyo to San Francisco, anywhere. So they wait for that entire cycle to be over. Then do they come to the gateways and try to settle the funds. Okay. Now, if this trend is to be reversed, you have to have more and more merchants who are acquired by the banks, so that the merchant doesn't have to, because say today if I have only 5 banks acquiring the merchants and 20 banks issuing the cards, automatically there is going to be a settlement problem. So if I change that and make say 20 banks acquiring the merchants and 20 banks issuing the cards, say even in the ratio of for every 10,000 cards issued, there will be 1 merchant, definitely. If I acquire it in that proportion, see today we have roughly about 68 crore ATM cum debit cards and about 20 crore credit cards in the country. So if you look at these, what are the number of establishments we have? Because most of us mostly move around in Mumbai or Delhi, we feel that it is convenient everywhere. It is not. So we have to make it convenient. So if the banks have to make it convenient, they have to acquire more and more merchants. Then only will there be a proper balance between my issuing the card and my using the card. Then that is a card product. Then about the foreign exchange. See, foreign exchange is one area where in the service charges you don't know really how you are charged. Okay, you can use your debit card when you go abroad. Again, while taking the card, the choice is yours. One is, you can ask only for a ATM card. You can ask for a ATM cum debit card. You can ask for a only India credit card. You can ask for an international credit card only to be used in India. And you can ask for an international credit card usable in India or anywhere else without you are telling the bank to make it open for usage internationally. So now somebody comes and tells you, okay, this is a multinational card, you can take it and all. And within 72 hours or 96 hours of receiving it, you get a SMS message from Kuala Lumpur saying your card has been successfully used at such and such store and you have been debited for 96,000 rupees. It has happened. It has happened. So be very clear what kind of card you require and how many times we use the card. See, in India, if you look at the trends, 3 or 4 places. One is petrol bunks, second is IRCTC. In fact, IRCTC is the biggest user of credit cards in the country. Then third is airlines, and fourth is eating joints. These 4 account for about 90% of our credit card usage. And now slowly what is coming up is the hospitals. Slowly they are coming up because they are accepting cards now for the initial admission money and all that, 25,000 or 35,000, whatever you have to deposit, they are accepting the cards. So once you have decided what kind of card you require, it makes life simple for you. Somebody is saying, okay, you take this card, how much fees? 2,500. What all it gets you? Okay, free entry in the airport lounge when you go there. How many times you are going to fly? See, even if you fly 4 times, even if you buy your thing, all the things yourself, it is still going to be cheaper than 2,500. And a person who is otherwise able to afford that fees, he need not be worried about accessing the airport lounge because anyway he will be traveling in business class. So he is anyway entitled to access the airport lounge. So we get carried away by this frills which we never use. So be very clear what frills you are really requiring. Are they really frills or you can manage with a no frills? And credit card, how much limit you should be having? How much should that be? And how many credit cards you should have? Half a dozen? Half a dozen, 2, 1? It depends, again, typically, I'll tell you, typically, if you are having your own car and driving, I'd say 2. 1, I'll have a fuel card with a very low limit. And limit of what? On a fuel card, what should be the limit? Huh? Excellent. So nobody is going to fill 25,000 worth petrol in a car. The tank also won't hold it. So have a fuel card with 10,000 limit and another card. See, like typically saving bank account. See, we did a survey. Finally, at the end of it, we came to the conclusion how much of money was being wasted by Indians by holding in saving bank. How much money should be there in saving bank account?
1 month's expense.
Yeah?
1 month's expense.
See, we did a work with the National Council of Applied Research and all. Then we came to the conclusion firmly how much a man can be comfortable with. If you are a salaried person, 2 months equivalent of gross salary. If you are a salaried person, 2 months equivalent of gross salary. And if you are a pensioner, 5 to 6 months worth of pension. Nothing more than that. And if you look at some of the people, and secondly, the points that come to the services level agreement being breached and all, start from here. Somebody calls you up and said, आपके अकाउंट में इतना पैसा पड़ा है. How many of you have objected to that call?
Correct me.
Because he's not supposed to know. He's not supposed to know. And if somebody is calling, put a complaint in writing to your bank. I presume somebody in the bank is leaking information about my account. How somebody else came to know that I have so much idle money in my account. So that the banker also is put on the guard. If somebody is doing it in the bank mischievously also, he or she will stop doing it. Okay. Then card products we discussed, foreign exchange. Foreign exchange, 2-3 things. If you want to do the real-time shopping using your debit card, do it, but very expensive. For every transaction, if it is in dollar terms, irrespective of the country of currency, you do it, you are almost loaded 2.5 to 3 rupees than the market rate which you are paying. That is effectively 5%. On the contrary, you can buy a forex card these days that are available, multi-currency cards, valid for 5 years. You just pay about 500 rupees. Most of the major banks issue them. You can get it loaded and use it as you want it there, and they are freely usable. And then the digital transactions which you look at. If you look at the ATMs and all that, see this OTP, password, SMS. How many countries have this facility? None. We are the only country.
Except India.
Except India. And who is paying for it? We are paying for it, and we are paying quite heavily for it.
How do you mean?
Okay. I use an ATM card of my bank. Say I have an account with HDFC Bank. I am using it to draw money, say in Hyderabad, in State Bank of India ATM. What it effectively means? It effectively means 8 STD calls. It effectively means 8 STD calls. The State Bank of India ATM where I have put the card, it rings up its central processing unit. It gets back to the national financial switch. National financial switches connects to the HDFC central switch. HDFC then connects it to the branch. The branch authorizes the transaction. Again it goes back. In no country you have this situation where you are relying on the OTP, you are relying on the SMS. See, if we cultivate good habits, we need not be too worried. Now ATM, how we made it expensive? Everybody, when it was new and all, no? The banks were also trying to promote its use and all, trying to get more footprints. So they said everything free. So every half an hour somebody will go, keep on checking the balance. In half an hour what is going to happen to your balance? It's not going to go down or go up. No. So the point is, we need to be proactively engaging ourselves in improving and changing our habits. And that's how the charges will start coming down. Otherwise, see, technology is one thing. And as I said, when the Reserve Bank of India Master Circular on Customer Service was issued, when they said the average cost of transactions. Now, how many of you are actually aware how much does it take? If I go to a branch, withdraw the money, and if I go to ATM, withdraw the money, I use the bank's ATM, another bank's ATM, withdraw the money. If you ask even a bank as a matter of academic interest, what is the cost of transaction? And I can tell you hand on heart, no bank has this information.
Well, but HDFC has been putting out all kinds of numbers from 45 rupees to 25 rupees, whatever.
They'll put that, ma'am, but let me tell you, let them say this is the cost. I'm saying, in fact, this is a challenge I have given to them. If you say 150, I said I'm willing to pay 150 rupees. Transaction charges. But you tell me the basis on which you have worked out 150 based on the footfalls and man hours, the per square feet area provided to the customer, and the lighting and air conditioning effects and all those things. Earlier it was very easy for banks to do this because it was all branch banking. So every customer of that branch only would go there. Nobody else would go there. So they'll say totally so many footfalls, so many checklists received, so many cash transactions. So this is the cost of transaction. Today, after 2001, once the core banking was rolled out in a massive way in the Indian banking industry, no bank has made any effort to find out what is the cost of transactions. And actually with use of technology, with technology intervention, cost should come down. You look at books, you look at music, you look at videos. In fact, books so cheap, finally that poor old man, Shenvi, had to shut down Strand. No, thanks to technology, he had to shut down Strand. I'm sorry for that because it was a wonderful place. I used to be there very frequently. So, if everywhere else technology has resulted in prices going down, why is it only that in banking the transactions are becoming expensive?
What is your explanation?
Yes, that's a
The
question.
explanation is because we have not made a serious effort to find out what is the cost of the technology that we are using, and we are not able to distinguish between what is the capital cost and what is the operating cost. See, every program upgradation, I am taking it as an operating expense. And the maintenance of the software is a huge expense on the banks. They have not tried to leverage that in terms of, see, a very simple thing I'll tell you. Now everyone is having just 2 or 3 solutions. Either you have the Finacle from Infosys, or you have the solution from Tata Consultancy, or you have from iFlex. Now, when you are talking of so much of other cartelization and all, when in the Competition Commission so many cases were being heard out, umpteen number of cases against banks in the Competition Commission, against the housing loan rates, against the deposit rates, saying this is a cartel and all. Finally, nothing could be proved because the ALM structure, that is asset liability structure of each bank, was different. So we said finally the market rates converge and there is nothing like carteling of these resources that is happening. Now, if these banks had come together and tried to have a common ownership of these platforms, how much cheaper it would have worked out? Instead of each bank trying to spend 200 crores every year on maintenance of a software program, suppose I had bought it out as a IBA on behalf of IBA. Instead of monopolizing, IBA had said, okay, these 3 versions, you pick and choose. Some 10 banks pick up Infosys, some 5 banks pick up Tata Consultancy, some other 10 banks pick up iFlex. So today the difference between because see, there the rules of depreciation also are different. On the hardware side they are different, on the software side 33% every year in 3 years. So all of them and the cost of ownership of the hardware and software is a ever increasing number. They have not been trying, and how we can leverage it is you have to seriously make an effort to reduce the footfalls of the customers in the branches by improving your delivery channels elsewhere. Not by denying services at the branches, but to improve your delivery channels so much that people don't have the need to come to the branch. Because that will save them a lot of space. You go to any of the foreign countries, the customers only that are there in the banks are the borrowers. There is no other customer in the bank. You look at the ATMs. Most of you would have gone abroad. It's just a hole in the wall. You don't have the privilege of a AC, a covered. They said CCTV what? He said the street traffic police run CCTV. It covers our ATM also. So anybody trying to fool us or play with it is captured in that CCTV also. So the rentals for the ATMs, the spaces, the maintenance cost, they are all skyrocketing. See today, a small cubicle for placing an ATM, what is the going rate when in distance? It depends. It is anywhere between 20 to 50, depending on the suburb in which you are operating. No, the customer is adding to it, and all of them believing somehow that rent means it must keep going up. That's the way they believe. Look at the inflation. So now, if you look at the NPCI latest data, it is actually showing a decelerating trend. Number of ATMs have started coming down.
So banks would know.
The banks would know as well as you do that if they were to reduce the pressure on branches and improve alternative delivery channels, the cost would come down.
Yes.
Why haven't they done so?
Okay. Why haven't they done so? The point is, the customers have to insist on getting the delivery in that channel at the place they want. We still believe that going to a branch means there is something of a prestige. I'm going, checking my... Because recently, I'll tell you, I saw a man much older than many of us here. He had come to the bank. I was sitting just next to him. He said, my deposit is maturing. Okay, the branch manager was very kind, courteous. He said, no sir, okay, we'll renew that and all. No, I want to see it. Okay, this is a deposit receipt. You see this. No sir, you kindly bring the cash, count it in front of me. I want to see my deposit in its entirety. So it was some 5 lakh deposit. The person obliged. That man has been with him for 40 years or so. He got back, counted 5 lakhs. He says, okay, no, this is the interest. Give me back. This 5 lakhs I'm putting back. So the alternate delivery channels that happens, they'll also have to be tuned in line with the acquisition function which I said. See, the more of disbursals that are there in the acquisition side, if I'm able to get them into the banking channel, the need for people to come to the banks will be that much less. That will automatically come down. Then only the seamless integration would happen with the services. And these services, the number of people and all, no, still we believe that the labor is cheap and all, it is not. Especially with the Supreme Court decision on the outsourcing coming, that whatever function is outsourced, there cannot be a difference between the wages paid to them and the people doing the same job at the main office or the main function. With that decision having come,
When is this decision?
the Supreme Court, it has come 6 months back, this decision has come.
On some particular bank related issue?
No, on another organization where they were outsourcing a particular function, where one of the employees had gone to the court saying, I'm doing the same work which the other employees were doing in the company. So why should I be paid less? So the costs have to come down. And secondly, coming to the trends in the later, see now everything getting automated and all, with things like artificial intelligence and all, the costs, how they are increasing. With increasing use of digital platforms, we are all becoming more lazy in trying to maintain our backups. So today you are suddenly every bank talking to every other big IT service provider in trying to look at the cloud. State Bank of India has signed an agreement with Google for holding their data backup in the cloud, the non-critical data of the customers. No, that has its own problems. See, cloud and all, today we are like living in, recently I was looking at a discussion on this issue in one of the American channels. So there they were saying, tomorrow he says, today we have looked at planes and all being hijacked. Tomorrow, if a satellite is hijacked, or a cloud on which your data is stored or backup is stored is hijacked, what do you do? What are the ownership issues? Does it belong to India? Does it belong to that particular country? Does it belong to the company? Where is it located? So recently Reserve Bank of India has told all the payment service providers
To put it here in part of the...
no, to the extent they relate to the Indian, the backup will be in India. So they are the kind of transactions that are coming. So these are the things that add to the cost. So today, if suppose it was cheaper for me holding this data in Nordic countries, today I am losing that advantage because based on regulation I have got to necessarily do it here.
Or there could be one other reason. That they don't have to.
That all of these things that you're saying, at least the private sector banks don't have to, because they are facing much less competition than companies in other areas. If they were facing competition, then they would find a way to reduce charges and acquire more customers.
No, see, I'll tell you, the fact is the competition is there for sure. But where is the competition? The competition is in those 64 cities where everyone is trying to look at the same piece of the cake and trying to have a bigger piece from the existing one. See, where they are not reaching out, if you look at the numbers at the aggregate level, we are still talking of a banking coverage of 12,000 population per branch. Okay, 12,000 population per branch. You take a place like Mumbai, we roughly have 7,000. For every 7,000 people, there is a bank branch. And for every 5,000, there is an outlet by way of ATM or a bank branch or a service delivery channel. So this is the dichotomy. Even if you look at the banking spread, you look at the east, you look at the west and south. East is poorly banked. And that poorly banked is leading to situations like your Sarda and Rose Valley. So it is in our interest that we take banking there as early as possible so that people don't get duped. They have a proper secure channel of channelizing their savings and getting that money to the main purpose.